I'm joined now by Berkshire watcher Charles Ortel. He's the managing director of investment advisory firm Newport Value Partners. Charles, always good to talk with you, of course.
Thanks for having me on, Betty.
Okay, so what do you make of these moves by Buffett?
Well, I reiterate my view that the railroad acquisition, I think, is particularly ill-timed. I think we're seeing in the wider world a burgeoning sovereign debt crisis that so far is focused on the weaker European Union countries. I think it's going to spread to the UK, and I think it's even going to affect the US before too long. So to place a highly leveraged bet on a company like Burlington Northern, which is rooted to the United States, has a heavily unionized workforce, has substantial liabilities now, and potentially growing contingent liabilities, seems to me to be a misplaced bet.
But you think trading, let's say P&G or J&J, is a bad decision for Burlington?
Well, I think that what has happened in the first 10 years of this millennium is that the investment case for America has been sorely weakened by bipartisan activity on both sides of the aisle. And if anything, I would be questioning, how much of an allocation I wanted to make long to U.S. securities of any kind. So.
And yet what you're seeing, though, right now is you're seeing most of these problems occur in Europe right now, at this moment, right? In Europe and the Middle East. There's some talk about things happening in Asia. So you might say that if you wanted to bet anywhere in equities, you'd want to come back here in the U.S., where it seems as if, at least for the past couple of weeks, that we've seen this rally in the markets.
Well, I think, people enjoy going to the racetrack, particularly in Hong Kong. But when you're buying securities, I think it's important to understand, the information behind these securities. And the information I see for most American securities suggests that they are highly, if not overvalued. The book that Buffett cites as his Bible, The Intelligent Investor by Ben Graham, talks explicitly about having a margin of safety. There's no margin of safety in U.S. stocks right now, particularly if you think that nominal interest rates are rising.
Well, he would disagree with you, of course, and he's made some bets in Wells Fargo, Walmart. What do you make of those? I mean, those are pretty big bets on the economy.
Well, I think, Wells Fargo is a particularly well-run bank. So, there, if you're going to make an allocation to the financial sector in the U.S., that makes sense to me. Walmart, when you get behind their numbers, as we have done a little bit of that, and you look at same-store sales in the U.S., and you look at cash flow, try to do cash flows from same-store sales, they're not very encouraging, and the price is pretty lofty.
Now, you had an interesting analysis. You said his purchase in a stake in Iron Mountain, this company, suggests to you that he may want to eventually, take control of it?
Well, yeah, Iron Mountain's an interesting one. In theory, it's an appealing business model. If we have a disaster scenario, that's where records are stored. It sounds good on paper, but then when you look behind the numbers, again, it's valued very highly as a ratio of cash flow. And the shorts, interestingly, have a pretty big position. About 10% of the float, according to Yahoo Finance, is in shorts. So the short community is decidedly on the other side of that bet. Now, the risk for the short community, of course, is that Buffett could decide this is...
Well, what makes you think that? What makes you think that he would actually want to end up taking an operational role in that?
Well, because of record protection. If you think about his insurance operations, it's a natural extension of, one area that he knows pretty well, to wanting to have the ability to take control of, or offer to take control of people's records.